Right, now let's wrap up the markets in West Africa, starting with the BRVM. Over all the markets in West Africa last week, yesterday we did see very minimal, in fact not a great day across the board. We saw the BRVM index up only 0.05%, and while the all-share index, the BRVM composite, was up 0.07%, 202 points. So pretty flattish performance in the BRVM yesterday. And moving on to Ghana, likewise we saw the GSE composite index closing at 1,852 points. So up only 0.07% as well, keeping its year-to-date change at about 54%. So still leading other markets in the region. And for the currency, currently trading at 1.99 cedis to the US dollar. It's now down 4.5% for the year. Moving on to Nigeria, it was really the weak link in the region yesterday. It was down 2.11%. The all-share index closing at 36,472 points. And looking across, you would find that it was a story around Dangote Cement. That share price was down about 7.9%, so just under 8% there, and that's of course dragging the NSE all-share index lower. Let's now cross to Stanbic IBTC, where David Alao, an analyst at Stanbic IBTC Asset Management, is standing by to give us some perspective on the fixed income market. David, thank you for joining us. I think the big story this week, beyond the MPC, and of course, that was all priced in. I don't think there were any surprises there. But of course, we did see the T-bill auction on Wednesday, and interesting results there. Maybe we can get your thoughts on that. We did see yields tick higher across the board for the 91-day, 182-day, and 364-day bills. So your thoughts on that auction and what it means for the fixed income market going forward?
Yeah, absolutely. At the T-bill auction, yields went up across the board. Largely, you have to analyze and dissect and look at the players who play at these different ends of the market. So at the short end of the market, largely you have your retail clientele and you have your local investors who are usually strong in this, particularly in the 91-day T-bill. In recent times, the CBN has been trying to, affect monetary policy by using OMO bills, and you've seen OMO bills closing at 12.25 in recent times, and they've been quite frequent as well, trying to mop up liquidity. So obviously, local investors have been piling into the OMO bills as opposed to buying 91-day T-bills, and they're taking their cues from that particular instrument to price where the 91-day should trade. Right at the long end of the curve, you have your foreign investors who are typically buying the 1-year T-bill, and they're not allowed to participate in the OMO bill because it's same-day settlement. Now, we haven't seen a lot of that in the last auction. So demand reduced, and then obviously that affected the pricing of the OMO bills at the one end year of the market as well. And of course, one of the reasons why we're seeing that is oil prices. Oil prices have become softer from a high of $107 on the Brent, trading at, went down to 103 and now sub 100. So really, people are watching the oil prices and watching where it's going to go. I think China also came out with weaker data, weaker manufacturing data, and outlook and output is also reducing. Obviously sending jitters around the world that, look, maybe demand for oil may not be as strong as thought. Japan's also not been very, very strong. So, I think foreign investors have been quite cautious when it comes to coming to Nigeria, at least in the past week or two, on the back of oil prices. And we think, in the long run, the economies of the world are forecasted to grow robustly, particularly in emerging markets and frontier markets as well. So I think that oil prices should still remain firm. I think they should remain above the $100 mark. But obviously, again, it's affecting the short-term play in the market.
Okay, David, if I can just get your thoughts on the AMCOM bonds. It's another big story from this week. They've announced a refinancing plan for the 5.7 trillion zero-coupon bonds. Now, if I'm holding AMCOM bonds right now, how do I play this? Because, of course, we know at the end of this year, we would see a few of those bonds maturing and another set next year. So if I'm holding those bonds right now, what do I do?
Actually, from my analysis, I think the outstanding stock is probably about 2.75 trillion. I think 3 trillion is already in CBN coffers. And I believe that the CBN plans to refinance 1 trillion now, and then, 1 trillion towards the end of the year, and 1 trillion towards 2014, or the rest was 2014. I think that obviously, in pricing it, the way to price it is on the back of T-bills, on the back of one-year T-bills from where we are today. However, one needs to understand that these bonds actually are not trading. Money market dealers have been appointed. However, it's still not trading in the secondary market. So really, if you're going to try and get a quote, it's going to be on a just trying to find out who's interested in the market generally. And I think the way to price it, as I said earlier, would be on the back of T-bills.